Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're taking a look at two nuclear energy stocks to consider buying on the dip for massive long-term upside. And those two stocks are Cameco, which trades on the ticker CCJ, and BWX Technologies, which trades on the ticker BWXT. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page for a look into some of our services, portfolios, and more. So before we jump into these two nuclear energy stocks to consider buying on the dip, I just want to go over where we are as a broader stock market to kind of give a base case for why it might be time to start dipping our toes into some beaten down stocks, and then do a little bit of a quick bull case for the broader nuclear energy industry, and then dive into these two stocks. So Wall Street celebrated the start of tariff negotiations on Wednesday afternoon, sending the S&P 500 and the NASDAQ skyrocketing. The stock market roared back to life after Trump, quote, authorized a 90-day pause and substantially lowered reciprocal tariff during this period of 10%. At the same time, the Trump administration doubled down on its tariff battle with China. Wednesday's massive jump highlights why longer-term investors should try their best to stay exposed to stocks during downturns. And it's also worth noting that we're still in the midst of turmoil. There's definitely, as I'm recording this Thursday, the market's right back down again. And there's plenty of time to continue buying strong stocks on the dip. Since it's really impossible to call a bottom in the near term, it's just worth taking like a broader step and look at where we are from a technical standpoint on a big time scale to maybe consider just starting to nibble at some stocks, and don't necessarily go all in. But once again, if you're a longer term investor, it should be a little scary to buy stocks amid all of the chaos, but that's often proven. The COVID lows, the 2022 bear market. If you're buying stocks then, look where we are now. So the NASDAQ fell below its 2021 highs late last week, reaching its most oversold RSI level since the COVID sell-off lows and the 2022 bear market. That rapid sell-off recently also took the NASDAQ to right near its 200-week moving average. And that long-term 200-week moving average is one of Charlie Munger's, Warren Buffett's longtime right-hand man who passed away in 2023, one of his favorite technical indicators. He is once said, if all you ever did was buy high-quality stocks at the 200-week moving average, you would beat the S&P 500 by a large margin over time. So on top of that, the CNN Fear and Greed Index, which is a really widely tracked kind of contrarian buy and sell indicator, is hovering at 6, which is extreme fear on a scale of 1 to 100. So the market's really fearful at the moment. And as Warren Buffett, these are trite sayings, but they're often true. Be greedy when others are fearful and vice versa. So the bulls on Wednesday scooped up the NASDAQ at roughly its 52-week lows, and that huge rally took it back above those 2021 highs and prevented it from hitting its 200-week moving average. As I record this on Thursday, we're retesting that 200-week moving average and going right back down to below those 2021 highs. So there's still a great chance if you're a long-term investor to buy this dip amid the chaos, and there could be certainly more near-term selling in the coming weeks and possibly months. But if you're a longer-term investor, you shouldn't be thinking where is this stock going to be in 2 months. You should be thinking about where it's going to be in 2 years or even longer than that. So especially with the stocks we're looking into today, the nuclear energy bull case is not 2 months from now or 2 years from now. It's possibly 20 years down the road. So long-term investors shouldn't be thinking very short-term, because that can scare you out of stocks and make you less likely to beat the market in the long run. So we're going to dive into the broader bull case for nuclear energy and then dive into these two stocks we're diving into today. So the U.S. government has launched various initiatives to support the nuclear energy revival, aiming to triple capacity by 2050. So they're thinking long-term, so we should be thinking long-term as well. On top of that, big economies like China and India and many others are going fully all in on nuclear power. Expanding nuclear power will demand tens of trillions of dollars and take decades, even though nuclear energy has already consistently supplied roughly 20% of U.S. electricity over the last 3 decades. in 2024 alone, we saw pretty much every big tech company, Amazon, Alphabet, Microsoft, all securing huge multi-billion-dollar nuclear power agreements. Microsoft and others have since reaffirmed their commitments to build out their AI data center network and spend heavily on CapEx, despite that DeepSeek news. So that is kind of in this broader backdrop is why nuclear is going to be a big part of it. We're trying to be energy independent along with plenty of other countries while slowly weaning ourselves off of fossil fuels in the long run, not anytime soon. But nuclear is going to be a big kind of growth trajectory over the long term. This backdrop helps you understand, though, why companies who are investing in AI are trying to get as much energy as possible, because large data centers can consume nearly as much electricity as a mid-sized city. Generative AI platforms like ChatGPT use at least 10 times the energy of a typical Google search. So this is kind of the push for all of this spending and CapEx on energy build out, which is going to be, as I said, not a near-term thing, but a really long-term play. So the critical players in governments, finance, and tech and heavy industry are now finally going all in on something that has, as I said, supplied roughly 20% of U.S. electricity for over the last 30 years. It also has the highest capacity factor at roughly 93%, making it the most reliable energy source in America. And this is according to the U.S. Energy Department. It's about 2 times more reliable than natural gas and roughly 3 to 3.5 times more dependable than wind and solar. And the new U.S. Energy Secretary used to be on the board of nuclear energy upstart Oklo, and the Office of Nuclear Energy, which is a part of the U.S. Energy Department, on April 2nd, tweeted out that the U.S. nuclear renaissance starts now. So the country is going all in behind nuclear, which is a good thing because it is a very capital intensive business. So the near term outlook also includes a bunch of hurdles, but these hurdles build the bull case as well, since we're thinking long term. So some of the biggest hurdles are the CapEx for these nuclear plants and how much government and big tech is really going to get behind these projects. And can we cut some of the red tape that takes builds that maybe used to take 10 years, take half the time? Will these small modular reactor companies actually deliver? And I would believe so. I think a lot of big tech is putting their money where their mouth is, thinking that if we could have nuclear power right after World War II in the US and the USSR, now Russia, why can't we do it 10 times better if the incentives are there now and everybody's kind of rowing in the same direction? And the goal for the US and many other countries is energy independence and a slow weaning ourselves off of fossil fuels. And this is over decades and decades and decades. So the ball is all kind of rolling downhill, and nuclear seems like it's going to be a long-term winner. So with that in mind, we're going to take a look at the first of these 2 stocks, and that is BWX Technologies, which trades in ticker BWXT. Is a nuclear power-focused manufacturing and engineering standout operating across energy, defense, space exploration, medicine, and beyond. It's expanding its commercial nuclear power segment and gaining ground kind of at the bleeding edge of the field through SMR technology, small modular reactor technology. It's also a top supplier of nuclear energy technologies across the public and private sectors. It designs and produces precision nuclear reactors, components, and fuel for U.S. submarines and aircraft carriers. It is a cornerstone supplier to the U.S. Navy and one of only a few companies trusted with classified mission-critical nuclear energy work. So that's a key kind of bull case for the company long term. And as I mentioned, it's growing its non-defense commercial segments as the country goes all in on nuclear power. It's one of its production facilities is already the largest commercial nuclear equipment manufacturing plant in North America. And it's expanding that to support as I said, the expansion, the rapid expansion of nuclear energy in the US and beyond. And it stands to become a big player in, as I said, that SMR field, which is the next generation of all of this. It's landed some big deals with the Department of Defense and the Energy Department over the last several years. It's also working with companies such as GE Vernova and TerraPower, which are also trying to be at the cutting edge of this SMR technology. So this is the backdrop for the basics of its business. And if we look at its growth recently, it grew its adjusted earnings by 10% in 2024, with its GAAP earnings up 15%. It also expanded its sales by 8% last year, averaging about 8.5% revenue growth in the trailing 3 years. Its CEO said when it reported its Q4 results that it's benefiting from record level of bookings and commercial operations driven by critical equipment for North America's first small modular reactor projects and power plant refurbishments. If we look to its growth, we're calling for roughly 12% growth on the top line in 2025 and 2026, which would be its best back-to-back year percentage-wise gains on record as a public company. And then on the bottom line, we're calling for another 5% adjusted earnings growth this year, and then 13% higher growth next year. And its upbeat earnings revisions landed a Zacks ranked number 2 buy. Overall, over the last 15 years, the stock's up roughly 350%, blowing away its broader aerospace sector's 62% climb. This includes a roughly 100% jump in the last 5 years, yet it's still down 25% from its November peaks. It is currently trying to find some support at a early 2024 breakout level. If we look at a technical chart, and it was until a few days ago at some of its most oversold RSI levels since early 2022. When it first started going on a big run after several years of stagnation. So the recent downturn, combined with its strong earnings outlook, has it trading at a 65% discount to its own highs in terms of its price to earnings to growth ratio. So its PEG ratio, which is at 2.5, which is also in line with its 10-year median, even though it's risen significantly over this time. It is a pure play nuclear technology stock exposed to, as I mentioned, multiple growth segments. It also boasts a really strong balance sheet that supports its dividend. And on top of that, Wall Street is a big fan of the stock overall. So of the 10 brokerage recommendations, which are up from just 8 several months ago, 8 of those are at strong buy. So overall, BWX Technologies, BWXT is the ticker, is certainly worth putting on your radar if you are a long-term bull on the nuclear energy revival and kind of the renaissance and upside for years and decades to come. And now we're going to transition into our second of these two stocks, which is Cameco, which trades in the ticker CCJ. Cameco is a Canadian uranium miner and a leading supplier of uranium refining, conversion, and fuel manufacturing services. It is the second largest uranium producer in the world. So that is, uranium is the fuel for nuclear reactors. And this is according to the World Nuclear Association. It boasts 2 of the highest grade mines on the planet in northern Saskatchewan, Canada. It is also one of the only large-scale uranium miners that most regular U.S. retail investors can buy. Cameco's importance to the U.S. and Western countries has grown as the U.S. attempts to slowly cut itself off from Russia and that region, which dominates the uranium market. Kazakhstan, which is sort of in the Russian sphere of influence, produces roughly 43% of the world's uranium. For comparison, OPEC members produce about 40% of the world's crude oil. So that just shows you how much sway Kazakhstan and that area of the world currently have over the uranium mining industry. So it's so important that Cameco is based in Canada. The U.S. uranium mining industry went nearly dormant until the U.S. government's recent pivot towards nuclear energy, but restarting the U.S. mining industry won't happen overnight. That is why Cameco, even though amid all of the current trade and tariff war kind of unknowns, the long-term upside is there because we are going to have to work with them to make this happen. Their CEO made a bull case for the stock and kind of the uranium industry in general pretty well. So I'm just kind of use this quote to make a bull case that I think should resonate with investors. So it says, "We are continuing to see positive shifts in government, industry, and public support for nuclear energy, further supported by recent announcements between utilities, reactor developers, and industrial energy users. With our assets and investments across the fuel and reactor life cycles, we are uniquely positioned to benefit from those tailwinds as a responsible commercial supplier with multiple long-lived Tier 1 assets and reliable jurisdictions." So that's a key point that we continue to make, that it's in a part of the world that the U.S. is despite what's happening at the moment, is going to be able to work with both the near and long term. So if you look at its growth over the last 3 years, its revenue went into booming revenue amid higher uranium prices. Uranium prices have fallen, but overall it did 22% revenue growth in 2022, 33% growth in 2023, and then 20% growth last year. So based on those very hard to compete against numbers, we're calling for another roughly 8% growth this year in 2025, and then roughly 3% growth in 2026. And then the bottom line, we're calling for about 96% adjusted earnings growth for Cameco, and then 66% adjusted earnings growth in 2026. And overall, its earnings revisions have stagnated a little bit recently, and its earnings revisions will fluctuate with the price of uranium. But as I said, this is not a near-term trading stock. This is a longer-term bull case, and it's worth noting that it's gaining more attention on Wall Street. We have now 15 brokerage recommendations for the stock versus just 12 3 months ago, and 12 of those 15 are sitting at strong buys with 3 more at buys. So there are no sell ratings for Cameco in the Zacks system at the moment. On top of that, the company expects to, quote, at least double last year's dividend of 12 cents per share to 24 cents per share over the fiscal periods 2024 through 2026. So that's their goal, is to double their dividend in the near term. And if we look at stock price performance, the stock is up roughly 315% over the last 5 years, blowing away the S&P 500, which is up around 100%. And if we look at a longer term price chart, this is over the last 25 years, Cameco is up roughly 1,800% versus the S&P 500. It's 321% climb, yet it's down nearly 40% from its December peaks. It, like the broader NASDAQ, is trying to find some support near its 200-week moving average. It's also trying to find supports near its lows over the last several years. So it could continue to fade a little bit in the near term. So there's no need to try to go all in on the stock now and call an exact bottom. It did finally break out above its pre-financial crisis highs over the last few years, and it has now sunk back beneath those levels. And so this is kind of the line in the sand that the bulls are going to try to hold. And if it does fade further, it could possibly sink a little lower. So if maybe you don't want to go all in on the stock, as I said, but it is trading at 30 times forward earnings, which is solidly below its own 5-year median, and trading at a 70% discount to the S&P 500 when we look at its PEG ratio at 0.5, which is also 50% below its 10-year median. So it shows that its recent downturn, trading 40% below its highs, along with its upward earnings revisions, help Cameco look pretty solid on the valuation front at the moment. So both BWX Technologies and Cameco seem like long-term winners in the broader nuclear energy bull case over the next, say, 10, 15, 20 years, if not longer. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.